each bank and non-bank 7A lender has completely different guidelines. Some of them they won't require full appraisal on your collateral property. They'll do a Zillow or something like that. It really is an internal overlay. On a 7A, some of the advantage of a 7A is that they can be done a lot quicker than a 504. There's only one piece versus a first and second loan with the 504. So you can close these in 30 days, potentially.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Bo Eckstein.
Hello, and welcome to another episode of the Investor Financing Podcast. And I'm your host, Bo Eckstein. And on today's show, we're going to discuss collateral requirements for the SBA 7A loan. And this is a big topic I like to discuss because sometimes I might have a loan or potential loan that could go either 7A or 504. And after hearing this episode, you might try to pursue a 504 if it's real estate or hard assets for the SBA financing you're seeking. So anyways, whenever you obtain SBA financing 7A, we're talking specific to 7A, they're going to look for additional collateral. Meaning, if you have a primary residence with equity in it, oftentimes they're going to put a secondary lien on that property. I think it's always important for potential clients and borrowers to know that that's what's coming. Now, it doesn't mean that you can't get an equity line of credit on before you close your SBA loan, but sometimes it's a fast-moving deal. You have $5 or $6 or $1 million equity in a primary residence. It's going to get collateralized most likely. So let me kind of dive into some of what the SOP says which is the standard operating procedure for the SBA. The SBA requires that the bank collateralize the SBA loan to the maximum extent possible up to the loan amount. And so you might say, well, the business is going to be valued at that. But listen, they're looking at the liquidated value. So even though you're buying it for $1 million and it's real estate and the business, they're going to look at the liquidated value of that. So the liquidated value might only be $500,000. So they're going to always look to collateralize rental properties, primary residence, etc., other equipment you might have. So be aware of that when you're looking into 7A financing. So oftentimes that's a conversation I have on why you might want to go 504. But the smaller deals are more beneficial because the 504 really is difficult to fund anything under $800,000 or so. Some markets and some banks will do smaller ones, but most of them want to do $1 million deals and greater.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
So be aware of this collateralization rule because SBA wants to be fully secured or as secured as they can. Remember, SBA is guaranteeing the loan. The bank or the lender or the non-bank lender is actually making the loan. So the important thing to note here is They're always going to look for cross collateralization on a 7A loan because they're going to look at liquidated damages. Now, each bank and non-bank 7A lender has completely different guidelines. Some of them they won't require full appraisal on your collateral property. They'll do a Zillow or something like that. It really is an internal overlay. On a 7A, some of the advantages of a 7A is that they can be done a lot quicker than a 504. There's only one piece versus a first and second loan with a 504. So you can close these in 30 days, potentially. And the lender, if it's a delegated lender, they can actually make the underwriting decision right there. It doesn't have to go off to SBA for approval. So that's the advantages of the 7A. Plus, 7A are better for business acquisition with no hard assets, more of intangible. So there's pros and cons to everything. I just want to make you aware about the cross collateralization, that they're always going to be looking for that cross to cover the risk factor of the loan, essentially. So just be aware. Thank you for watching another episode of Investor Financing Podcast. If you're looking for some guidance on SBA financing, please book a call below. Happy to discuss, or any type of commercial or rental financing. I'm happy to discuss all of this. We do multifamily, pretty much anything business, rental, investor type of financing. That's our wheelhouse. That's what we do very well. And happy to give you referrals if you have need a good referral to a residential loan officer. If it's, sometimes you can do these portfolio loans on these rental properties, and sometimes you can do a conventional loan on a non-owner, and sometimes it's more advantageous. So happy to discuss your financing needs. Open up my Rolodex to you because you're a faithful listener and watcher of this show, and I appreciate it. Please do me a favor and like, subscribe, and I will see you on the next episode. Thank you.